Broadcasting from the underground studios deep in the heart of the bullshit. Welcome to the Rebel Lawson Show.
Hey, this here is Rebel, and welcome to the show, where the truth is raw, the talk is real, and the BS is left at the door. So if you're tired of being fed sugar-coated lies and half-truths, you're in the right place. Here we don't coddle your feelings, we don't pander your ego. We hit you with the hard facts no matter how uncomfortable they might be. So if you're looking for a dose of reality, if you're ready to challenge your beliefs and confront the truth, then you are in the right place. But if you're here for some feel-good nonsense and a pat on the back, you might want to keep on looking.
Hey Rebels and Misfits, welcome to the Rebel Lawson Show. I am your business reporter, Rachel Stein, and do we have a show for you? Okay, everyone is up in arms these days about the new Trump administration. Elon, Gabby, RFK Jr., and Vivek. But you know what, we are already starting to see some movement in the White House retirement home, and this is a good sign. Did you know that people spent an average of $1,300 on Christmas this year? That's right. These numbers haven't been seen since 2019. So is it people are excited about the future of our economy? I think so. Now, there has been a lot of criticism on Elon's position as head of the spending that these fat cats in Washington have been doing. And we have seen how the power of the internet and the power of the people are going to sway how our money is spent. I am so excited for this. With that, our topic today is going to be a little craziness that has been in and out of social media: the flat tax. So, just what is a flat tax, and will it be beneficial all the way around? We are going to break it down for you and see what you think at the end. But first, if you want to hear more content from the Rebel Nation, then hit that like and subscribe and share it with your friends. We will be back after these messages. Well, hello there, we are back. So let's dive into this, the flat tax. So, what's a flat tax? It's simple, really. Instead of all these complicated tax brackets where you pay different percentages based on how much you make, everyone pays the same rate. That's it. One rate for everybody, whether you're flipping burgers or running a big company. Now, let's break down why this could be a game changer. First off, it's way simpler. No more spending hours filling out forms or paying someone to do your taxes. With a flat tax, you could probably do your taxes on a postcard. How's that for easy? Second, it could actually put more money in your pocket. Let's say the flat tax rate is 15%. If you're making $50,000 a year, you'd pay $7,500 in taxes. That's it. No surprises, no complicated math. You'd know exactly how much you're going to take home every paycheck. But here's where it gets really interesting. Right now, the government's losing a ton of money because people ain't paying their taxes. We're talking $688 billion in 2021 alone. That's billion with a B, folks. With a flat tax, it'd be way harder to cheat the system. More people would pay their fair share, which means the government could actually end up with more money. Now, you might be thinking, but Rachel, won't this hurt poor people? Here's the thing, with a flat tax, we could get rid of a bunch of complicated deductions and loopholes that rich folks use to pay less. Plus, with more money in everyone's pockets, people would spend more, businesses would grow, and we'd see more jobs. It's like a big ol' economic circle of life. Let's talk about businesses for a sec. Right now, small business owners are spending a fortune just to figure out their taxes. With a flat tax, they could spend that money on hiring more people or buying new equipment instead. And get this, they could write off those expenses right away, not over a bunch of years. That's huge for growing a business. Now, I know change can be scary, but look at some places that have tried this. Estonia, for example, switched to a flat tax in the 90s and their economy took off like a rocket. We've even got some states in the US, like Colorado and Utah, that use flat taxes, and they're doing pretty darn well. Here's another mind blower for you. With a flat tax, we might not need such a big IRS anymore. We could save billions just by simplifying the whole system. Imagine that. Less government bureaucracy and more money for things we actually need. But let's keep it real. There are some concerns. Some folks worry that a flat tax might not bring in enough money to run the government. But here's the thing. If more people are paying their taxes and the economy's growing, we could actually end up with more money in the long run. So, what would this mean for you? So let's go back to the idea you make $50,000 a year. With a 15% flat tax, you'd pay $7,500 in taxes. That's $288.46 taken out of each paycheck if you're paid every 2 weeks. Simple, predictable, and probably less than you're paying now. And here's the kicker. All that extra money you're not spending on fancy tax preparers or worrying about complicated forms, you could spend it at local businesses. Those businesses do better. They hire more people. Those people spend more money. You see where I'm going with this? It's like a snowball effect, but with money instead of snow. Now, I ain't saying a flat tax is perfect. No system is. But when you look at how complicated and messed up our current tax system is, it starts to look pretty damn good. But let's dig a little deeper, shall we? Now, I know what some of you are thinking. Rachel, this sounds too simple. What's the catch? Well, let's break it down a bit more. First off, imagine not having to dread April 15th every year. No more scrambling to find receipts or trying to figure out if you can deduct your dog's haircuts as a business expense. Spoiler alert, you can't. With a flat tax, it's just one simple calculation. Boom, done. But here's where it gets really interesting. Right now, the government's losing out on a ton of money because people are either not paying their taxes or finding sneaky ways to pay less. As we said earlier, this is $688 billion in 2021 alone. That's enough money to buy everyone in America a pretty sweet flat-screen TV and still have enough left over. So just how would everyone benefit? Government, local and state, businesses and you? Let me lay it out for you, and trust me, it's gonna blow your mind. First off, let's talk about you, the hard-working American. With a flat tax, you'd be keeping more of your hard-earned cash. We're talking about an extra grand in your pocket every year. Now, what are you gonna do with that money? You ain't just gonna stuff it under your mattress, are ya? No, sir, you're gonna spend it. Maybe you'll finally fix that leaky roof, or treat yourself to a nice dinner out. And here's where it gets interesting. That money you're spending? It's going right into your local economy. It's like you're giving your town a shot in the arm. Now, let's follow that dollar. You spend it at Joe's Hardware to fix your roof. Joe's business does better, so he hires another worker. That new worker now has a job, and guess what? They're spending money too. It's like a snowball rolling downhill, getting bigger and bigger. But wait, there's more. Let's talk about businesses, especially the small ones. Right now, these folks are spending a fortune just figuring out their taxes. With a flat tax, they could kiss those complicated forms goodbye. We're talking thousands of dollars saved on tax prep alone. And get this, they could write off new equipment right away. That means more money for hiring, more money for growth. It's like giving every small business in America a turbo boost. Now, I know what you're thinking. Rachel, this sounds great for us, but what about the government? Don't they need our tax dollars? Well, hold on to your hats, 'cause this is where it gets really interesting. See, right now, we know the government's losing billions for non-payment and deduction loopholes. It's just too damn complicated. But with a flat tax, it's simple. More people would pay, and it'd be a lot harder to cheat. We're talking higher compliance rates, less money spent on enforcement, and better prediction of how much money's coming in. But here's the kicker. We could streamline the whole government tax machine. The IRS, dramatically downsized. Department of Commerce, we're talking $109 billion saved. Department of Energy, another $160 billion. And the Department of Education, A whopping 194 billion saved. That's a lot of zeros, folks. And it ain't just the feds. State and local governments would benefit too. With more money flowing through the economy, they'd see higher sales tax revenues. More businesses doing well means more property taxes coming in. It's like the whole system gets a boost. So let's recap. You get more money in your pocket. Local businesses thrive. New jobs are created. The government saves billions and collects taxes more efficiently. It's like everybody wins. So I know you are all curious just how this is going to save, how long it would take, because we know government change doesn't happen overnight, and how would we keep it during a party change? So, let's start with the numbers. Right now, the U.S. tax system is a bloated mess of brackets, deductions, and loopholes that costs taxpayers and businesses a fortune to navigate. We all know this because we have lived it for all our adult lives and heard our parents as kids cussing the IRS before we knew what it was. The cost of tax compliance in the United States is staggering. Americans spend between $546 billion and $1 trillion annually on compliance-related costs, including time, software, accounting services, and lost productivity. Let's break this down and explore how a flat tax could save money, simplify the system, and potentially grow the economy. How much do we spend on tax compliance? Americans collectively spend 7.9 billion hours annually complying with the tax code. That's equivalent to 3.8 million full-time workers doing nothing but tax paperwork more than the population of Los Angeles. The opportunity cost of this time is estimated at $413 billion annually. So let's talk the out-of-pocket costs. In addition to lost productivity, taxpayers spend about $133 billion annually on out-of-pocket costs like accounting services, tax software, and filing fees. For businesses, compliance costs are even higher due to complex regulations. And the burden on business. Large companies spend an average of $25.6 million annually on compliance, with smaller businesses disproportionately burdened because they lack the resources to handle complex tax rules efficiently. This complexity discourages growth and innovation. So let's go over just how it would save money again, because this is where I feel is the kicker that could get more people on board. Let's recap the simplified filing component. Right now, the U.S. tax code is a nightmare of complexity. It includes 480 forms and requires Americans to spend billions of hours figuring out how much they owe. A flat tax would replace all that with just 2 postcard-sized forms, one for individuals and one for businesses. That's it. No more hunting for deductions, calculating credits, or worrying about phase-outs. You'd know exactly what you owe, and filing would take minutes instead of hours or days. And don't forget reduced compliance costs. The current tax system costs Americans between $546 billion and $1 trillion annually in compliance-related expenses, including time spent on paperwork, accounting services, and software. Here's how a flat tax would cut those costs. For individuals, taxpayers wouldn't need to hire expensive accountants or buy complex software. With a single flat rate and no deductions to calculate, compliance costs would plummet. For businesses spend about $70 billion annually navigating the tax code. A flat tax would eliminate the need for extensive accounting departments or consultants. Small businesses, in particular, would benefit because they're disproportionately burdened by compliance costs under the current system. Reduced administrative costs. Remove most of the IRS interdepartment. Like, why the hell do we have interdepartments anyway? Feels a little redundant. The IRS spends billions each year enforcing the current tax code. A flat tax would simplify enforcement dramatically. With fewer deductions and loopholes, there'd be less room for error or fraud. The IRS could downsize significantly, saving taxpayers even more money on administrative overhead. Small businesses are the backbone of the economy, producing half of private sector output and employing over half of the workforce. Under a flat tax, compliance costs would drop significantly. Businesses could deduct investments like equipment purchases immediately instead of over several years. Lower interest rates due to simplified taxation on capital would make borrowing cheaper for small businesses. These changes would free up cash for hiring more workers or expanding operations. The economic benefits of a flat tax go beyond just saving money. Simplifying the tax system could lead to significant economic growth. Economists estimate that switching to a flat tax could increase GDP by 2 to 6% within a decade. Some studies suggest growth as high as 15 to 20% over 10 years as businesses invest more and workers keep more of their earnings. And don't forget the job creation. With businesses saving money on compliance costs and reinvesting in growth, over 1 million new full-time jobs could be created within a few years. Along with higher wages, workers could see wages rise by about 1.4% as businesses reinvest their savings into their workforce. By eliminating taxes on investment income like dividends and interest, a flat tax encourages saving. Long-term savings could increase by 10 to 20%, boosting national savings rates by 0.5 to 1% of GDP. But how would this work? Here's an example. Under a proposed flat tax system with a 17% rate, a family of 4 earning $50,000 would get a generous exemption around $33,000, meaning they'd only pay taxes on $17,000. Their total federal tax bill? Just $2,890, which is far less than under the current system. For businesses, they'd pay taxes on gross receipts minus purchases from other businesses like raw materials or equipment. No more double taxation on dividends or capital gains. This simplicity allows everyone, individuals and businesses alike, to focus on what matters most, growing their income and investing in the future. Okay, so just how long would it take to implement? I mean, as I said, and we all know that government change doesn't happen overnight, but transitioning to a flat tax could be done gradually. But here is some examples I think would be a start on what can be done to help the transition. Year 1 to 2. Set up new systems for withholding taxes at a flat rate. Year 3 to 5. Phase out deductions and loopholes gradually to avoid economic shocks. Year 6 plus. Full implementation with streamlined compliance processes. This phased approach ensures fairness while giving everyone time to adjust. But how do we keep it during political changes, you ask? Good question. Let's look at that. One concern is how to maintain a flat tax if political power shifts in Washington. We could look at constitutional protections like some states with flat taxes, like Colorado, who have enshrined them in their constitutions to prevent future changes. A similar approach at the federal level could provide stability. But now we need to look at how do we get the public to buy in. Messaging is key here. Emphasizing fairness, flat is fair, and simplicity resonates across party lines. Highlighting how it benefits small businesses and middle-income families can build bipartisan support. Getting bipartisan collaboration under the Tax Reform Act of 1986, this would simplify taxes with bipartisan backing by focusing on fairness and efficiency. A similar coalition could push through a modern flat tax if framed as pro-growth and anti-bureaucracy. The bottom line is that a flat tax isn't just about simplifying how we pay taxes, it's about transforming our entire economy. Saving up to $546 billion annually in compliance costs, boosting GDP by up to 6% within a decade, creating over 1 million new jobs, encouraging investment and savings, streamlining government operations. While challenges could remain, like ensuring fairness during the transition, the potential benefits make it worth serious consideration. So what do you think? Could America pull this off? Would you support a simpler system that saves money and grows the economy? Let me know your thoughts. But thank you for listening, and if you like the content and more topics like this, leave us a comment below. Also, hit the subscribe and the notifications and share this with your friends. Till next time, this is Rachel Stein signing off. Be sure to join Rebel and Rose on their next conversation as well. Remember, always take those blinders off. Step outside the box and research everything before you make a decision. Catch ya on the next one.